In this video, we're going to talk about how attorneys nationwide can fee share with Hoglund Law because of your situation, Robert. I mean, this is the ERTC tax credit is a funding mechanism or a tax refund mechanism that's probably, we've never seen anything of the likes. Is that fair to say?
I would have to agree. I've seen a lot of diamonds in the rough as far as opportunities for legal or otherwise in the past 33 years now that I've been practicing. And like I said before, this is more of a diamond mine in the rough.
Yeah.
And this diamond mine, unfortunately, has a closing period relative to the statute of limitations running on amending 941 tax returns. So we got still another probably good 3 or 4 years left of this, unless for some reason the government or otherwise decides to halt this program for applying and getting a refund under the employee retention tax credit. Go ahead, Phil.
But what's unique about this for you in particular is if I have a client, or not even a client, a friend, a dentist of mine that I know, and I refer him to a CPA, the CPA is going to help him and do whatever. Lawyers have the ability to fee share amongst lawyers. So share how the attorneys listening to this program right now could fee share and actually generate revenue by, referring their friends and acquaintances to you that may have employees that may want to take advantage of this tax.
Oh, sure. I have relationships with many attorneys and law firms throughout the country for a fee sharing arrangement, and assuming that that's allowed in the jurisdiction, I would assume most jurisdictions allow fee sharing as long as the attorney is on the retainer agreement, which we put all of our attorneys that refers cases on the retainer agreement as well. And but before I go there, any attorney that I do develop that referral relationship with, we're very transparent. I send these attorneys copies of the retainer agreements for them to review to make sure they comply with the jurisdiction that they practice in. I send them copies of the malpractice deck sheets that we have for all the law firms involved relative to us putting together an employee retention tax credit. And then I put together a hypothetical fee split. So it's very transparent. And with my law firm, I share a third of whatever fees that my law firm garners after sharing fees with our sister tax law firm. So with Hoglund Law, anytime I retain a client, it's my law firm, and we have another sister tax law firm. We both work on these files together. And again, the reason that we do that is that there's a lot of money at stake here, and you don't want to screw it up. And I've had a lot of attorneys say, well, why don't you just do this by yourself? Well, I have my expertise in certain parts of the ERTC, and our sister tax law firms have their expertise. And I just don't want to do anything to jeopardize the attorney that's referring me cases, or jeopardizing the individuals that have been referred to us by attorneys, because those are their relationships, and we cherish those and make sure that these clients are safe. So on that note, we do share a third of a third. We put the law firm on the retainer agreement that refers us the client. And now, under the employee retention tax credit, once we amend those tax returns, it is 8 to 10 to 12 months before there's a check issued directly to the client, the business, and then they cut us a check relative to the contingency fee, which is anywhere between 10 and 20%, depending on the complexity of the case. It's paid to us, and then we pay the sister tax firm anything to Hoglund Law. Net, I would pay a third of a third to an attorney or law firm, assuming it's ethical to do that in the jurisdiction that they practice.
And Robert, what are you seeing from your attorneys are referring you business, right? Like, let's give some practicality examples of this. It's sort of like, it's not always, attorneys may be thinking, well, I don't have clients that have employees, but it doesn't matter about that, right?
These are all acquaintances and relationships that these attorneys have with individuals that they're either family or friends, or that they do business with. It's not their client base.
Right.
It's their relationships. And when I first started this quite a while ago, can think of maybe 10 business owners off the top of my head. Well, I went through my social media, my contact list on my phone or otherwise, my emails. Heck, I came up with 150 or better individuals that I knew that own businesses that had W-2 employees.
Yeah.
And it's just, it's a lot of an awareness thing, really, just being conscientious of, your day-to-day activities and who you do business with that are business owners that have W-2 employees.
Well, and also the key thing is the client is not paying any different by them getting a part of the fee. The client or the person who you're helping, Robert, pays X or whatever it is, and you're paying them based on the fees you would have already generated. So, and more importantly, it's the referral to your firm, which is what really matters, which we'll talk about in the next video, about the importance of having a firm that understands the complexity of this, because a lot of people are being told, no, you don't qualify, and you actually do, right?
Correct.
So, and Robert, what are you seeing, like when it comes to approval rates on average, if you talk to 10 people or vet 10 companies in a day, what percentage of them qualify for ERTC funding and don't, or this refund and versus not?
Oh, probably upwards of 60 to 70% of people will qualify for at least one quarter, because you get 6 quarters to qualify. You qualify by quarter. And those are the last 3 quarters of 2020 and the first 3 quarters of 2021. Now, by qualifying, that's a very loaded question or comment. Now, what that really means is that the business in question has a very colorable claim for a tax refund, and that they have actual mandates or revenues behind them claiming that tax refund to show the federal government, in the event of an audit, that they are entitled to that refund as it relates to the rules for the employee retention tax credit. So really, the qualifying is they have a colorful claim. There's not a great likelihood for an audit. There's no big red flags. And if they do get audited, that they have the government mandates or revenues decreasing at a rate that would qualify them under the employee retention tax credit. But it's an extremely ambiguous, complicated set of rules. And especially, what we found too is that most business owners, I should say most, probably half of business owners have other businesses as well. And when that happens, they're all intertwined, sometimes to the advantage of the client, sometimes to the disadvantage.
Mm-hmm.
A good example of that is if you have 2 businesses. You have business A, where you have one owner that has more than a 50% stake in that business. And then you have business B, where that same owner has more than a 50% stake in that business. Business B could be printing money, not affected by COVID at all. But if you qualify business A, business B automatically qualifies. And
yeah, we're gonna get. I want to save that story.
We'll get into that, yeah,
because that's so important, specifically for you, right? You lived it. Now, one of the things I want to point out is that you said to me, I don't know, about a month ago, you were like, Phil, this is the easiest thing to bring up to anybody. How many employees do you have? 10. Okay, probably it's a potential to have $200,000 in refund. Do you want to talk to someone for 10 minutes? I mean, really, this is the conversation that we're having. This is why we're having this conversation, to educate our attorneys that use our services, so that you can go out there and take advantage of this tax refund. I mean, this tax refund is there, and it's not going to be forever, but it's going to be something that you can take advantage, and your acquaintances can take advantage. Robert, anything else about fee sharing before we go to the next video?
What I always tell the attorneys that law firms that are referring me clients, this isn't an email blast. This is a conversation that you really should have with your friend, your relative, your acquaintance, whoever you do business with. But it's a very short-lived conversation. And why the emails don't work really well is people just don't understand the significance or the impact
Yeah.
the refund could make. They don't understand the $20,000 rule. That is that on average for Hoagland Law, every part-time or full-time employee, we get about a $20,000 per employee refund.
Right. Mhm.
Again, 30 employees, $600,000. But moreover, there's a huge trust factor there because there's a lot of bad players in this market, in my opinion, a lot. They've popped up. And to me, for any of you bankruptcy practitioners out there, they're very similar, in my opinion, to the debt consolidation companies. They're about of that caliber, and I'm sure you know what I mean. I don't need to go any further with that, but the conversation in and itself is very short. And again, I would recommend a conversation versus an email because it's so much more personal. But the conversation goes somewhat like this. Bill, have you heard of the employee retention tax credit? And there's going to be probably one of 4 different answers. Is one, yes, I've applied, thank you. Or 2, they're going to tell you that they didn't qualify. Somebody told them they didn't qualify. Or 3, they think it's a scam. Or 4, that they might have their accountant looking at this, but they really haven't heard anything.
Yeah. And
the second question that you would ask your acquaintance is, well, how many part-time or full-time W-2 employees do you have? If they say 20, then you tell them, well, you could be sitting on about a $400,000 tax refund. See, most people don't understand the significance of that. They think, oh, maybe I'm getting $5,000 back or something.
Yeah, right. No. Yeah.
And typically by the end of that conversation, you would email me or text me that individual's name, phone number, preferably a cell phone, and I'd reach out to them. And again, I personally vet every client, whether they have 2 employees or however.
That's fantastic, Robert. I mean, have you heard of ERTC? Their response, great. How many employees do you have? Let me show you this number. You should talk to this guy because not all ERTC funders or qualifiers or whatever you want to call themselves are created equal. Most of them aren't even law firms, sadly. There's a breakdown when it comes to fiduciary responsibility when you're dealing with some guy that started his company just to create ERTC funding. Go try to find him in 6 months. We'll get to that on the next video. How to contact Robert Hoglund, phone number 612-482-3010, 612-482-3010. And he's at robert@ertcfunding.co. That's robert@ertcfunding.co. On this next video, we're going to talk about give you a real life example of how all ERTC funding companies are not created equal and why using Hoagland Law is very unique and special. And of course, you can take advantage of fee sharing because you're an attorney.